Could the Clarity Act actually be bearish for the markets? Today, we're going to break all that down for you. It's going to be a fantastic show. I do want to thank our sponsor today, and that is Uphold. Speaking of clarity, this is one of the things you need to protect, and that is your staking rewards. Also, some of the assets that you can earn yield on, all is available over on Uphold. One of the other things that I really like is you can actually earn yield on your US dollars inside Uphold. So very easy to set up over there as well. Doesn't require a lockup. And the last thing is you always need a debit card. Well, there it is. You can get the debit card right here with XRP rewards, no credit check. Set it up just like any other debit card. Works almost like a bank, guys. Imagine that, having a platform that's going to do the things that banks could do. Well, we're going to be talking about that and much more today. Before we get started and bring in Zach Pandle, who's coming in from Grayscale, I want to show you guys a clip because this is a little bit striking to me, and I want to get your opinion. Take a look.
And we want everyone to be able to do that and make our capital markets more efficient.
But does it take the moat away from everybody's business? If everybody can do the same thing, what happens in the end?
Customers win with competition. I mean,
I was a little taken back by that. If everybody can do the same thing, what happens in the end? That's, Andrew, that's how competition is created, is when everybody has a level playing field. And I think that's what crypto is asking for. So joining me now is Zach Pandle coming in from Grayscale. How are you, Zach?
I'm great, Paul. Great to see you. Looking forward to this discussion.
Have you been watching these clips coming out of WEF?
I absolutely have. You know, everyone very zoomed in on everything that Brian Armstrong has to say on this topic, you know, yeah. Right at the center of these issues at the moment.
A rock star there at WEF right now. So I don't know if it's a good thing or a bad thing, but he's definitely getting a lot of notice. Hey, I want to talk a little bit about the point of ETFs. Obviously, with you guys very bullish on ETFs, do you feel that ETFs would essentially be dead without the Clarity Act?
Now, the Clarity Act, or what they're working on at the moment, will touch on all kinds of aspects of the industry, but we think that ETFs will still have a pretty clear regulator path provided by the SEC, even without the market structure bill. The SEC made some changes late last year called generic listing standards that should allow us to continue to move forward with altcoin ETFs, with staking in our ETFs products, even without that piece of legislation in Congress. So we want to see that happen, but certainly the ETF business can move ahead without it.
Who do you hold more accountable right now? When you look at the Clarity Act, the failure, let's just call it what it is, it's a failure right now coming out of DC. There's really only a handful of people you can look to. You're either going to look to Trump himself, you're going to look to David Sachs, the digital czar, or you're going to look to maybe Patrick Witt, who is the guy who was charged at going and getting this done. Or maybe you could go ahead and look at Coinbase. Who would you say is the culprit here in terms of its failure?
For Grayscale, really the sort of Title I of this bill, which clarifies assets as securities, commodities, this sort of thing, that's the most important piece for our business. We hope we can get this thing over the line. Look, Paul, I'm not crazy about putting blame on any one person, but I think really the core issue is about competition. It's about competition from banks for the yield. Banks in our society get a subsidy. They get a subsidy from the public for providing digital money. I need a checking account balance to pay my bills. That's my digital money today. We're talking about introducing a new type of digital money, which has lots of different benefits, including potentially the ability to earn more interest, and that is competition for banks. And so I think if there's one party that deserves blame for this bill not getting over the line, it's the bank lobby and their resistance to competition. But like it or not, this competition is coming. Whether it happens this year or the coming years, it's a better piece of technology for digital money, for making payments, for earning interest on my savings. So stablecoins are going to win. It's just a matter of time. And maybe we are hitting a meaningful roadblock on this piece of legislation, but I'm very optimistic on the outlook for this competition over time.
Well, I'm glad you're optimistic. The more I look at what's coming out of DC, the more dystopian it feels. And that concerns me. Obviously, you look at one of the areas that many people have kind of talked about, which is tokenized securities. And you kind of look at just what's happening right now in terms of the metrics. We are continuing to see pretty significant growth. And let's just be clear, guys. One of the big culprits that we identified, I thought was a friend to the industry. I'm surprised at their activities with Securitize. And they, of course, are going head-to-head with X stocks. X stocks is clearly a Solana play. This lends into the benefit of what you guys are doing, Zach, because you've got a Solana ETF. So does Solana actually benefit more without clarity right now? What do you think?
That's a great question. I think that regulatory clarity would lift all boats in the industry. So I'm bullish on clarity for the industry rather than bearish. But the point is well taken that this will have not just positive effects on every part of the industry. It will clarify the nature of competition. There will be winners and there will be losers. I believe that Solana is in a great place in either scenario and is likely to be one of the long-run winners. And I do think that stock equity trading, tokenized equity trading on Solana is a pretty natural fit, given how optimized that chain is for trading already. Obviously, it's been a leader in meme coins and other aspects of crypto trading. It will be a great fit for tokenized equity trading. I think Solana likely to be a winner with or without the Clarity Act this quarter.
All right, you're giving me some good answers that are very political, Zach. I'm just going to say that. What matters most right now when you look at the Fed fund rate of what we're seeing? Obviously, we're going to have an FOMC meeting here the end of this month, the 28th. Chair Powell is going to be over there, dancing around the data, as I say all the time. Do you think it is the price of Bitcoin or crypto in general, or the Fed funds rates that are going to benefit from clarity going through?
I think clarity will be a big positive catalyst for crypto. And I think the regulatory piece of it probably is a bigger short-term driver. One of the reasons that we're a little bit weaker to start this week probably is the fallout from last week where the market structure bill did not get a markup in the Senate. It looks like the process is at least stalled for now. Hopefully it can get back on track. But that stalling of the legislative process probably the factor weighing on crypto this week. Beyond that, the macro trade is very positive for scarce commodities like Bitcoin, like Ethereum. Of course, we see that playing out in precious metals. We think that will be coming to crypto. But probably we need to get over some of this regulatory uncertainty until the capital is willing to chase that trade in crypto. I think the macro side, the dollar debasement side, the need for alternative stores of value very much in focus across capital markets. That'll come to crypto in due course. But yeah, it is skipping over our asset class at the moment.
Listen, I've looked at what came out of D.C. I've had a handful of attorneys take a look at the reports, researchers. None of this looks good. And in fact, it starts to address a lot of the wins that we had in 2025. I was looking at your report was going through this, key crypto policy changes, right there, a lot of which gets affected by this. And if you think about it, it's almost every single one would get affected by clarity. And that includes, what we're dealing with right now around privacy, what we're dealing with in the DeFi space, the idea of protecting the DeFi space, yields that came through with Genius, all of these things that went through in 2025, which were very positive, seems to be almost a complete pivot toward against these points. How would you answer that?
Look, I think I would agree with Coinbase's Brian Armstrong in the sense that a no bill is better than a bad bill. So we can't go backwards on the gains that we made last year on stablecoins, on ETF listings, on protections for developers. We don't want to go backwards. We want to go forward. And so if that means taking a step back and picking up this legislation under the next Congress, then potentially that's a good outcome. That being said, I do think a lot of those gains are sustainable. And it's important that eventually we codify these things into law such that we don't have to wait on the next election to decide what crypto policy in the United States is going to look like. We want a durable framework for operating a business in this industry for the coming years. A bad bill, certainly not as good as no bill at all. So to get a piece of legislation through Congress rather than just rush something through that'll set us back from where we were last year.
Yeah, I'm looking at your report, which, by the way, great job on all the work that you guys put into this. Number 3, theme 3 that you have for the 2026 reign of terror that we're dealing with right now. Reach of stablecoins to grow in the wake of Genius Act. Obviously, we've seen that actually happen. And many people would say, all right, does that happen after clarity with the situation of them ripping the yields right from the hands of, every investor in America and possibly going after even more aggressive? How do you think stablecoins will react to clarity if we do see that occur?
Let's not kid ourselves. The yield issue is very important for stablecoin adoption. We'll continue to see stablecoin growth for transaction demand as a medium of exchange. It still has a lot of scope there. But without yield, I do think it will slow adoption. With the ability to earn yield, these really become an investment product, not just a payments medium. And so if you're taking away the ability for a stablecoin to earn yield, I think it will slow adoption temporarily and can be considered a win for the bank lobby that is aiming for this. Eventually, we're going to get there. I mean, stablecoins will be ubiquitous in the financial system. It will be obvious at some point in the future that they need to earn a yield. But the bank lobby seemingly victorious here over the short run and slowing down adoption. I think it is what it is. The crypto industry has lots of other things that we're making progress on, but if we can't pay interest on stablecoins, it will tap the brakes on adoption.
The amount of adoption by regular investors, much lower than what it was once we started just to apply one little thing, which was a measly, 4 to 5% yield on a stablecoin. That's not even, what you might get on an aggressive tech stock or even a non-aggressive, much less a dividend that's out there. So this was really drawing in traditional investors. I want to jump into another area that was interesting within the report, and that was the red herrings for 2026. You had a couple in here, quantum computing, and then also DATs. Explain to me your position on these.
Digital asset treasuries just means a public company that has an outsized amount of crypto on its balance sheet. And these were a huge topic in 2025. 2025 in some ways the year of the DATs. Look, when we look ahead, I think that we're going to see a consolidation in this industry to the largest players and those that have an innovative business model in some way. It's not going to be enough just for a public company to hold crypto on its balance sheet. The ETFs are an excellent way to get efficient crypto asset exposure into a portfolio. They're going to be the first stop for most investors. But if the DATs can do something with the public company structure, you have an operating business, potentially have more flexibility with what you can do with your capital, with how you can fund the business, then potentially there's some scope. So I think we will see a narrower list of digital asset treasuries this year and a lot of consolidation and more innovative ideas.
Well, I think the one, at least I'm betting on, I want to get your opinion, was a very weird move, I thought initially. And then I realized, wait a minute, this might actually be a brilliant move. And that, of course, was Tom Lee and Mr. Beast, where Tom Lee Bitmine, one of the biggest DATs, well, the biggest DAT on Ethereum, is putting $200 million into Beast Industries. This essentially is a new financial platform that's being generated. You go look at the data between Gen Z, Gen Alpha, and even millennials to a certain extent. Zach, you're talking about 200 million people. That is insane in terms of a market fit. What do you think about that? Would this be the winner coming out of the DAT phase?
Look, I am intrigued by this move. As the parents of teenage kids, I can kind of speak to the power, certainly aware of the power of Mr. Beast. Look, I think it's an intriguing on-ramp potential for Ethereum. What we want to see is some type of integration between the platform that Mr. Beast is building and his access to end users and onboarding to Ethereum. If we can find a way to find some sort of economic integration over time, then yeah, potentially this will help Bitmine compete against the other digital asset treasuries. And it's exactly the type of strategy that you want to see. You want to see these businesses expand beyond just owning the digital assets on their balance sheet and find other ways to support the ecosystem to drive adoption. Potentially a partnership with Mr. Beast could be exactly the right thing for Bitmine.
Well, I think this is one I'm watching because that was not on my dance card for this year
sure.
when I saw that come through. So kudos to Tom for thinking outside the box. Let me go to your theme 7 on your report, DeFi accelerates led by lending. All right, so I am in agreement that If Clarity were to go through and actually protect DeFi, this might be a monster move. But under the current situation, this looks like it could be a target zone for banks, because if they do win against yields, the next place they're going to go hunting for bear is going to be in DeFi around lending. What do you think is going to happen there?
Look, I think DeFi is going to win in the long run. I have no doubt. It's a better way to offer these products. You know, something like collateralized lending, what Aave specializes in, it doesn't require dozens and dozens of humans operating these systems. That's what we've learned. That's why these platforms are already so successful. But your point is very well taken, and I'd say it's both things like applications of KYC AML rules to DeFi is an important issue, as well as token classification. You know, we're in the investor side of this, you know, and we're looking at things like Aave through the lens of token holder rights versus, you know, the equity entities that support these platforms. That needs to be clarified with legislation. So, look, the Clarity Act is going to have big implications for our industry, and exactly how the text lands will determine who the winners and losers are. For DeFi, what we want to see is reasonable applications of KYC AML laws where they fit. You know, decentralized platforms do not have the ability to respond to those types of requests, so that they're not appropriate in those places. And we want to see token holder rights clarified. We want to know, if you're making an investment into the Aave token and the Uniswap token, that you have some sort of understanding of the rights that you have claim to. So that's what we want to see in Clarity. I hope we get clean text that follows those principles to the president's desk before too long.
You lean in a lot to privacy there. Your theme number 5 was privacy solutions that are needed within the blockchain, especially as this tech starts to go mainstream. I fear, though, that under the current, you know, proposal right now with Clarity, you're dealing with essentially KYC and AML. All of our privacy essentially is going to get thrown under the bus. I mean, at least that's the way it looks. How would this even be something that we would need if privacy is not necessarily guaranteed?
Everybody has an expectation for financial privacy, you know, your paychecks, your taxes, your spending habits, your assets. Nobody wants all of that information on a public ledger. I think that just is completely obvious. Now, there are lots of ways that we can approach this issue, and lots of different solutions within crypto. You know, Zcash, we find an especially compelling idea, because there's clearly demand for decentralized digital currencies like Bitcoin. But we know that Bitcoin has this weakness. It doesn't have privacy integrated into the base layer. You know, one of our favorite assets here at Grayscale. Zcash, a good place to allocate capital if you're beginning to express a view on this specific theme.
Now, Zcash was the platform that lost all its developers, though.
There was a kerfuffle a couple weeks ago. They certainly didn't lose any developers, but some change in org structure around a wallet program that was trying to raise more capital. They're going to go spin out into a private entity, raise capital, I think positive for the community. So as you know, Paul, in crypto, there's often some kind of a debate around kind of development priorities and the different organizations that surround these platforms. But the good news is that we don't need to rely on these things. These are decentralized public networks that are based on economic incentives, and so, you know, small changes in terms of the development orgs around it, not a big deal. But in this case, I would see this as positive for the ability to bring new capital into Zcash over time, rather than something negative for the ecosystem.
Okay, all right. You're selling me on it a little bit. I'm not completely.
I'm going to keep trying.
Yeah, keep going. Listen, I'm talking about AI. And centralization is the problem, and it calls for blockchain solutions. You guys called this out. I agree with this. I think that, yes, that does. The only problem is that I don't think that our crypto czar and our AI czar believes this. I think he's just going to, and I'm talking about David Sachs, I don't think he gives a shit about this. So my question is, if they don't care, how would this even matter?
The public is going to care.
Okay, I hope so.
we have Bitcoin because money is so important that we can't leave it all to a centralized set of people. We have to have an alternative. And the same is going to be true for artificial intelligence. You know, AI technologies, we believe, will be so important in the 21st century that we can't just leave it to a small group of centralized parties. We have to have an alternative, decentralized solution. if you had to pick one platform, that BitTensor is really the leading platform offering that alternative today. We'll see whether it's a long-run winner, but we're convinced that we have to have these alternatives. And today, BitTensor is the one with the most compelling chance to run away with the network effects in this AI-based blockchain tech.
I'm looking at why people would, because you look at dollar debasement risk, this is driving demand for monetary alternatives. You look at, Bitcoin over maybe something like gold. If you look at gold and silver as we're recording this, I don't know, has it blasted through another all-time high? Maybe within the hour? It just keeps on going. And now you have Solana, which is essentially develop a tokenized gold product. So why would people go that route as opposed to going the route that what has happened over the last year, which has been into the commodity sector? What do you think would happen there?
Well, yeah, there's lots of different assets that are affected by dollar debasement, and this is precious metals, gold, silver, platinum, and palladium. These have been taking off. Other foreign currencies, I think the Chinese yuan, as China has given more space in Asia, as the U.S. pulling back from some places, potentially benefits from these types of moves. And cryptocurrencies like Bitcoin and Ethereum also benefit. Now, the nature of capital going into each of these spaces is different. That's why gold, silver, the Chinese yuan, price of Bitcoin, they don't all move in lockstep. There's different investors, different types of capital flows. But over time, they will all reflect the effects of dollar debasement. So the reason to pick a crypto is that we think will have higher returns than these assets, because it's not only a dollar debasement theme. That is a huge piece of it. But we have a piece of technology that's going to transform the financial system. And so when you're allocating capital to crypto, you're getting both bets. You're getting dollar debasement, and you're getting this innovative technology that will have all kinds of ramifications across the financial system. I put those two things together, and to me, there's no better asset class for me to be spending my time and capital on than crypto, because it is that double whammy of macro demand and adoption of blockchain technology that's driving things forward. I think that continues very much this year. Granted,
what I'm seeing coming out within this clarity component is one thing that is concerning me. So that would be the only shaking point, in essence, that would possibly set crypto back maybe as much as a decade, I feel like, if this goes through the way that they're trying to get it through, because it would put the gatekeepers back in charge for at least that long, or move all of our innovation offshore again. And we've already almost got some of that innovation back. But even then, a lot of the developers we talk to, they're still saying, let's wait and see. So they even have a little bit of skepticism as to how this is going to play out here in the U.S. I want to go to a lightning round with you.
Okay.
And the lightning round is just quick yes, no answers. That's the rules. Short. If you have one sentence, okay, I'll live with that. But short answers. And what we're talking about is L1 outages. Okay, we've had another L1 outage that just happened not too long ago. You guys know who it is. If you don't know that, go out there and do some research. I won't name names. Well, okay, it was Sui. So the point is will the L1 outages move people to trusted chains? What do you think?
No.
No.
Look, no. That's my one-word answer is no. Not to permissioned chains. Look, we've seen Solana had a period of outage. Work through those things and have a great uptime track record. More recently, Sui, we think one of the leading next-generation blockchain chains. Not surprising to see occasional outages. It'll work through those challenges over time. I think be in a great position to compete over time.
Zach, I mean, come on. We know what the outage was over. That was not a technical difficulty. This was just mismanagement. So I don't know about that. Okay. Corruption wins over innovation in 2026 Innovation
Definitely
or
not.
Corruption?
Innovation continue to drive the market forward, no question, and clear
I love
regulation.
Your positivity.
Unstoppable positivity, for
I
sure.
say corruption is stronger right now. It's stronger right now as of today. So I love the fact that we are going definitely opposite here. This is great. Banks try to ban staking rewards if successful on stablecoins. What do you think?
Good question. I think they will not try to go that way because they see staking rewards as sufficiently distinct from stablecoin yield. So they will focus
take
on just a narrow
every last dime from us. Period. There is no, okay, all right, well, I like your positivity, man. I hope you're right on all of these. Trump chaos will only escalate in 2026. What do you think? We've got the tariff chaos coming. We've got global macro. We're trying to take over Greenland. We're talking about, crazy thing. Who knows what we're going to be doing in 2 years? What do you think?
Look, let me say this. I think we are probably at peak uncertainty right now on this topic. And if the Supreme Court rules against the White House on the Lisa Cook issue, and if he nominates Kevin Warsh or Chris Waller for Fed chair, I think actually that will put more confidence back into the idea of Fed independence, and we will move beyond some of this particular source of uncertainty. Now, that doesn't change many other things, including our enormous debt problem, which we're going to be dealing with for many years. But in terms of institutional uncertainty and Fed independence type issues, I think we may be past the peak of that by the end of this week.
I'm on the fence on this one because Trump throws curveballs. And I have been hit with these curveballs multiple times when I thought I wasn't going to get hit with an inside high curveball right across the chin. And that's what he does. So if you know
depending on how the tensions with Western European countries unfold this week, it could certainly get worse.
Yeah, for sure. Sentiment turns against the centralized exchanges in favor of decentralized exchanges. What do you think?
We saw evidence, so I think yes is the answer, and I think we saw evidence last year that crypto was increasingly eating its own cooking in this regard with the success of Hyperliquid. That I think an important leading indicator that more and more volume will shift to decentralized platforms over time, but it's a long time coming. It'll take a long time, and the centralized exchanges, of course, have some advantages, but Hyperliquid, an important first success story last year.
Here's one for you. You can answer this. Grayscale launches a fully open DeFi product in 2026. Do I get you to say anything good here?
Look, let me say that Grayscale has had a large number of firsts in its history. Most recently, the first asset manager staking our Ethereum ETFs at scale, and you will continue to see a long list of firsts from us this year, I think focused at the start on more altcoin ETF products.
I think you're up to something, okay? I'm going to say
we
you
are
guys
always
do
up
that.
to
Yeah,
cool
you guys
ideas,
are up to something. I know you guys. I think you're going to do it. So there you go. All right, Visa will continue monopolizing credit cards and merchant rails. You think this is another one? These are great.
Stablecoins are coming after the credit card business. And I think what you will see first is that online payments, for online shopping, consumers are increasingly going to see a stablecoin option for payments, and this will be attractive for consumers and merchants. And so I believe that the monopolies that, the quasi-monopolies that the credit card companies have on our payments networks are coming to an end. And stablecoins will be the mechanism to really change that.
Man, I'm going to say I think they're going to keep winning. After seeing what I've seen so far, the lobby is just so powerful, Zach. How can you battle a lobby that is spending $500 billion a year? How can you battle that?
Well,
it's
crypto needs to compete at the during the election season. I think is a piece of it. As we saw last time, I think Fairshake will be very active this time around as well. But the most important thing is it's just better technology. So we'll get to the right answer.
Well, that is true
eventually,
bar none. Because had you asked me that question just 6 months ago, I would have said, "Oh yeah, they're done. Yeah, game over." No, these guys. They got a lot of tricks in their bags. Interesting stuff. Zach, I don't mean to put you on the hot seat. I hope you aren't mad at me. But I do that with every guest, is we like to get answers, as you know, here on this show. But thank you so much for being a good sport and coming on the show today. We appreciate it.
My great pleasure, as always, Paul. Let's do it again soon.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.